What are tokenized stocks and indexes? Tokenized stocks are digital tokens on a blockchain that mirror the price of real shares or indexes. They come in two main varieties: wrapped tokens, where an actual share is held by a custodian, and synthetic tokens, which simply track the price via oracles without holding the underlying asset. Real-world examples already exist. Platforms like Kraken offer around 60 such tokenized securities for 24/5 trading. Meanwhile, Robinhood Europe has launched stock tokens, but legally those are derivatives rather than true equity. How it works: you buy a token that lives on the blockchain and its value reflects the underlying asset. If dividends are offered, smart contracts may distribute them automatically. But here is the catch: voting rights are almost always absent. Buying is possible via platforms that support these tokens, often requiring KYC and paying platform fees. The legal and operational structure varies. Here is advantages: trades almost round the clock, beyond traditional stock market hours. Enables fractional ownership. You don't need to buy a full share of Apple or Tesla. Global access. Investors in many countries can access shares they previously couldn't. Faster settlement and transparency thanks to blockchain infrastructure. Integration with DeFi. Tokens can be used in decentralized finance ecosystems, and here's disadvantages and risks. You don't get the same legal rights as owning traditional shares, like voting rights or full regulatory protection. Counterparty and custody risk. If the custodian fails or smart contracts are flawed, your tokens backing may collapse. Liquidity may be limited, and volatility or wide spreads may hit you when you try to exit. Regulatory ambiguity. Many jurisdictions haven't yet recognized these tokens as legitimate shares. You may be buying exposure, not true ownership. For example, when warrant investor the tokens offered for its shares did not represent actual equity. Is this a replacement for the stock market? No, at least not yet. Tokenized stocks and indexes are more of a supplement than a substitute. They offer innovation, access, and new features, but they don't replace fundamental investing, regulation, or direct share ownership. The tokenized equity market is still small. Estimates suggest tokenized real-world assets exceeded 25 billion by mid-2025. Compare that to global equity market sizes in the tens of trillions, while some forecasts speak of tokenized stocks reaching 1 trillion by 2030. This remains ambitious and speculative. Conclusion: tokenized stocks and indexes are fascinating and technologically forward-looking, but remember, you may be buying a technical instrument that mirrors value, not necessarily the full rights of ownership. If you're going to invest, do so with clear head. Only use money you're okay risking, and don't abandon the fundamentals of stock investing: analysis, regulation, real ownership, because innovation is exciting, but caution still wins.